All right, so welcome to the Practical Wealth. So, what we're going to talk about today is what we're going to call the four stages of whole life, but really the four stages of the IBC, or as we call it in our system, the private reserve strategy. And what I want to do is kind of give you a roadmap to control and financial sovereignty. And I want you to look at it because, money comes into your personal economy. It comes in the form of inflows, outflows, money leaving, and capital flows. And when you are paying premium for permanent insurance, first of all, permanent insurance is not an investment account, it's not a high yield savings account. The I try to focus people on the guarantees. It promises a result. It's a contract, right? You do this, you get that. So there's an economic value of certainty, right? And so now if you begin to look at it correctly and position it becomes what I call the foundational asset in one's personal economy. So we're going to talk about that because once you set this up, one of the things that we're using this for is, when I look at a client's personal economy, one of the things that jumps out to me, hey, Vinko, is debt recapture. 90+% of people we run into are debt. So when I look at the framework for this, let's set this up right. So we call it the Money4Life Framework, which is earn money, bank it. Okay. That means save it somewhere to let you be the bank. Borrow what? Use your bank. Banking means creating a pool of capital that you control. So we're going to save it somewhere, permanent life insurance. Okay. Borrow against your bank, spend it. Now, what do you spend it on? Major capital purchases. One of our things right now is to, recapture debt for opportunities to make more money and repay it with interest, right? So where I want to talk about the thinking around that, repay it, the whole thing. So it's a system, right? So you can't not repay it. It's not free money. It's not, and one of the things is it helps you recover things like opportunity cost. And so that's where we're going to go. So let's talk about the four stages of really one's belief system around this. And wait, all right. So the crisis of control, I want to call it, right? So, because this is really about liquidity, use, and control of capital, okay? And what we do is we abdicate control. Nelson says we give over the banking function, he says, to fools, right? And so as you abdicate control of your money, it's like sending your children to boarding school and they return with their values because that's where they're at 24/7 and not your values. I've never understood that. And being the banker is a retention of control. Money circulates within the family perimeter and your values are well preserved. The more you keep and control, the less others have control over you. Don't let the institutions be the Geppetto to your Pinocchio. So I hope y'all Geppetto was I hope I don't have to explain that. You know who's Geppetto is. Watch the movie. And but so here's the maturity matrix. Where do you stand? So stage one we call the saver. That's the foundation. Tough money, or as my friend Wade Borth would say, I like to call it safe money. When safe, green tank, safe, liquid, accessible, guaranteed. Stage two is the wealth builder, the accelerator, defense and offense. Stage three is the business banker, the entrepreneur, money is inventory. And then stage four is the infinite banker. So a lot of people that are stage one and they trying to make the system work like stage three or four, but they're not capitalizing like that. Okay. And so here's what I mean. So let's go through the stages, right? So most of the people are here. Like the target audience is it's really everybody. The goal of the IBC is to build the 10%. Said if we got more control of our money, there's a thought said the Fed would be irrelevant. I don't know about all that, but I think it's a good idea of just you being sovereign. Okay. And because if you borrow from your bank, your policy, every time, like when people talk about inflation, inflation is really not the Fed. Inflation is created at the commercial bank level because if you get a mortgage or a loan or a credit card, that money didn't exist before you took a loan. So that expansion of the money supply is okay. Inflation meaning expansion of the money supply, not higher prices. And so we are in a lot of inflationary situations, war or whatever, right? But if you are when you take a collateral position against your savings, that's not creating new money. That is just borrowing against or using your money as security, right? So you can't. And here's the thing: you should be saving at least at the bare minimum 5%, but I say 8 to 10 to 12% of your income save, right? You got to spend less than you earn and you got to create a capital flow. So the concept is you can't invest until you capitalize. Let me repeat that. You can't invest until you capitalize. You can't invest. I was telling somebody I was at a meetup. And Liz said, "What do you think we should do?" I said, "Well, I don't know. What do you want?" They said, "What should you think I should invest in? What are you trying to accomplish?" "Who am I? I don't know you. We just met, right? Having a beer." I said, "What are you trying to accomplish? How much savings do you have? Do you have 2 or 3 months of liquidity set aside?" And then guess what? You don't need to be say investing in nothing other than your education, right? And the saver focus on storing capital in a safe, guarantee environment to do what? Reduce financial pressure. So the question I want to ask you to ask yourselves: are you calculating your life, because you are the CEO of your life, fast enough? So reclassifying assets, the liquidity contracts, the insurance is a contract. Do you want most people focus on statement wealth? We want you to focus on contract wealth because that's real. And so the contract is a guaranteed payout when it's needed the most. At death, it's a promise to pay. And then it's also liquidity available for every single day prior to death based on the cash value. And so you get privacy, tax free growth, guaranteed liquidity. You request a loan. You don't have to apply for a loan with an insurance company and asset protection. So it's not just death insurance, it's a contract that guarantees cash flow or access to capital when you need the most. So I know this is basic for some of you, but you know, I was taught you master the basics and never get off of it. You got to block and tackle. So we're going over blocking and tackling today. So stage two is the wealth builder concept. So you're going to go from passive storage because the question I ask people is where do you store your cash? But then you just want to let it sit there. You can't accumulate your way to financial freedom, right? And so then, you know, you want to be saving 15 at least 10. So you make 100 grand, you should be saving 15,000. I mean, and so 15 and at least 10 or 12 flowing through this strategy. We believe, okay? And so here is the big shift in mindset. Premium is not an expense, but that's how a lot of people see it. And it's an opportunity to capitalize, right? That's and the action is the first action is take control of liability. So when we talk about the framework, earn it, bank it, borrow it, spend it, repay it, the result of that are what we call the four pillars of a strong personal economy. So, pillar number one, freedom from debt to others. So, people say, I want to get out of debt. You don't want to get out of debt. If you owned your own bank, who should be your best customer? Right? So, you want to take control of your liability. So, you change the direction from leaving to coming back to you. Stop renting money from strangers and move from passive storage to active defense. One, recapture your debt. And then once you've got your emergency fund, you clean up your balance sheet. Now you should be looking for ways to deploy your capital into things, assets. Income follows assets. So if you want to become financially free, you've got to build assets so that they throw off cash flow equal to or greater than your earned income or great at least twice your expenses is what I try to talk about. So let's spotlight. Let's do a strategy spotlight. So chaos versus opportunity. So here is the thing. So what's your burn rate? The burn rate is what's your liquidity number? So if your income stopped, got laid off, how long could your business got shut down, you got hurt, how long could you last? A week, 2 weeks, a month, 3 months, 6 months, a year is the goal, at least, right? So you got time to convalesce and get back on your feet. And so most people don't have that number. See, so what we want to do is that's one of the questions, what is your burn rate? See, we teach in our fourth principle liquidity, 6 to 12 months of liquidity, not $1,000 your emergency fund and pay off all your debt. No. And then after, let's say 4, 5, 6 months, then it becomes your opportunity and you've got capital available for deployment. So here is the hierarchy of debt. Attack bad debt, credit cards, high interest. This is our program we call debt to capital. Bring debt in-house and recapture the interest. Okay, so you want to earn it, borrow it, spend it, repay it, but you're going to repay it at cost, right? So just because you can get the money from at 4 or 5% from the insurance company, if you're replacing a 15 or 18% credit card, you should keep the same payment that you are willing to give strangers. You need to send that money back to you. Okay. And then once you get out of debt, you should never really, other than like if you're an investor or something, go into debt for little ticky tack stuff again if you'll capitalize. Because what does Nelson say in the book? Become your own banker. So if you're watching this for the first time, you don't have that, or you haven't read it at least 4 or 5 times, I'm going to tell you right now, you don't understand it. Because when people say to me, well, I read it. I read it like 2 years ago. Well, tell me, what's the grocery store? Tell me about I just want to, if I had it in her hand, I would grab the book from her hand and smack them side of the head with it. You don't know Jack S. I mean, you're a beginner. You think you got it and you don't know anything. One of the things Nelson would say is the more you see, you did not see. Okay. And so you got to always rethink your thinking. So the only difference between chaos and opportunity is who holds the cash when a storm hits. So you want to deleverage yourself. What's a storm? COVID was a storm. So if you're an investor and all of a sudden you have all these city councils and the government making it legal for your tenants not to pay you your rent, but the mortgage companies still want their money, that's a storm. Who has the money? And then so people are losing businesses or whatever. Do you have enough capital to survive that storm and then turn around and go on offense and maybe buy some of your competitors? Okay, because you were prepared. And businesses change. It's called creative destruction. So, the purpose, if you haven't prepared, you're supposed to go out of business. I mean, there are some safety nets, but I don't live with no daggone safety net. So that's your job to prepare for that, not relying on the what is it called? The kindness of strangers as your first choice because you're irresponsible. Is that too harsh, guys, for the early morning? All right. So now let's talk about stage three. So now you're the business banker. So as I go through this, where are you on this continuum, right? Are you treating personal finance as a business? What does Nelson say? Everybody needs two businesses, the one that gives them a paycheck and their banking business, right? And so what is banking? Think of your money as inventory. You got a policy, or overfunded, properly structured, permanent policy. And now, what are we doing? I'm going to opportunity comes up. I'm going to deploy. See, to a bank like a PNC or a Wells Fargo, a loan is an asset. The your savings is a liability, right? So, because they're loaning out money and getting an interest rate, which brings in income. So that's what we got to learn how to do, right? You want to repay with interest, you want to grow the system, right? And so if you're a business banker, now 20 to 40%. So if you're making $1 million, 200 to 400,000 goes through your system, okay? Because money is the inventory, okay? And so where are you? And so you got to grow to that, right? And but now you're beginning to um take, I have a client right now, we're using this to recapture, you know debt. So within 6 months, probably within the year, I'll have recaptured 12, $14,000 a month of debt. And then once we recapture that, which will probably be like a year and a half, knowing this person, we will now begin to take over purchasing of equipment, her trucks and that kind of stuff. And then past that, now you go, oh, well, I want to do private lending, I want to do bridge loans. You to exercise what is in the book, infinite banking is the exercise of prophecy, imagination, and logic. So you have to use your imagination, okay? And so a lot of people, most aspire to this. So I know people that are a level past this, and they're be the bank, you, not just a consumer, right? So once you have a pool of money, Nelson said, if you have money, opportunities find you, right? So you become the financer for real estate flips, business expansion, private deals. So just don't be a consumer of bank functions, be the bank. What is banking? It's a concept. It's not a product, right? And just for somebody, I was at a cookout, said, well, yeah, when I heard you talking about banking, I was thinking you're talking about IULs. So I'm probably going to send this video to you. I am not. Okay. To be clear, I'm talking about properly structured dividend paying whole life with a mutual company, sometimes a fraternal or a membership, but basically not a stock-owned company. And your savings. So you got to get where you are. See, is earn it, right? So if you're not making money, you can't be the bank, right? And then if you're bank, it means, okay, I've got to organize my cash flow, so that I have a surplus so that I can pay myself first, and then we're going to use that money to pay premium, right? We're going to capitalize our system, but past you capturing your debt, you want to put it to work. So this might be 5 or 10% of the people out there. Nelson later in the book says premium should equal income. But in the book, he says, listen, it's a concept, it's a thought exercise, and it will take 20 years to get there. Okay. But it ain't going to take 20 years to get there doing $400 a month. Okay. So the concept of closing the roof, right? Creating a financial ecosystem where the family is interdependent and not dependent on commercial banks. How would that be? Okay. Um, and now, because you want to be able to borrow, if you got to borrow, so I'm listening to investors. Nelson says don't do business with banks, but you know, it takes a minute to save up 50 or 100 grand. So if you got good credit, you should access that. But, borrow money to make money. Don't borrow money for stuff. Okay. And so, but if you built a closed financial system, family income goes into your private reserve, right? Your family bank. Now can you finance college, cars, homes, and repay the family bank back with interest? So if family members do business with the family bank, we make sure the interests align. Why pay interest to strangers? A guy in Canada, Jason Lowe, he's got 87 policies, right? And so his family members, if they can borrow from the family bank, they got an attorney, they set it up, they create the terms, they get a lien holders on a car, on a house, and if you ever miss a payment or if you ever default, you're out of the family banking system and you can't come back in, which is, it's a business. You got to run it like a business. All right. And so if you can do that, how would it feel to never have to walk into a commercial bank again, other than for, as Nelson would say, a convenience of a savings or a checking account, really a checking account and a debit card to transact. So here is the evolution of control. Step one is the saver. So the first thing that we do is try to help people spend less than they make. See, if you can't spend less than you make, then your upkeep becomes your downfall. So that's why our first step is to manage cash flow and find and eliminate wealth transfers. So our primary goal is safety and capitalization. So if you're at the saver level, you're like, okay, I like this idea. I need a vault. I want something that gives me more optionality than a savings account. And a lot of people stay there. So it's not horrible. And you might put like 8%, 12% of your income through it. The wealth builder is saving 15%, 15, 20%, right? And so their goal is acceleration. I need a shield and a sword, right? I need to protect myself and then I need to go on offense, okay? And then the infinite banker, well, the business banker, I'm sorry, is 20 to 40% of their revenue flows through properly structured policies. So it's profit, inventory. So you see the money as your inventory because you're in the banking business. And what does Jay-Z say? I'm not a business man. I'm a business man, right? So are you a business? How do you see yourself? Is really the question, right? And then the infinite banker, I know maybe 10 people that are here, okay? And where my mentor, Joe Bentozzi, tells his wife, something happens to me, you pay the insurance. Don't worry about the mortgage. You pay the mortgage, but they got enough, but 30 is last time I talked, his premium was 35 grand a month, right? And but he's policies are mature, so they're basically deposits and they're properly structured policies. So now you are the system, and that's where you want to be, I believe. So here's the thing: banking is not a product. It's not a product that you buy. The real key in Nelson Nash's becoming your own banker is the word becoming, right? It's be, then do, have, right? So who does your family need you to become? This is a process. It takes education, courage, and the willingness to cut the strings of the Geppetto banks. And so here's your immediate action plan. If you're watching this, are you expiring? Are you a saver, aspiring to be a builder? Locate yourself on the map. We need to, and this is what we'll do at Practical Wealth. Let's calculate your burn rate. Okay, define your survival number needed to unlock investment clarity. Challenge the premium. Shift your views from an expense to a capital flow, and you're building an asset that you control, right? And close the leak. Stop giving interest to strangers. Stop, eliminate wealth transfers. Or transfer me primarily this, but you're looking at your overall personal economy and say, this money's leaving. And then, what we do is we help people calculate the opportunity cost because you finance everything you buy. So, because you either are making money, you either are using somebody else's money, giving up interest you could be earning, or you're paying cash, which is still financing. Because you just transferred your money away to whoever you wrote that check to, or that debit card says, a lot of y'all not write checks no more. Close the leaks. Can't fill a bucket that has holes in it. You can't outrun inefficiency. So small shifts, but they say little hinges swing big doors. So check out practicalwealth.net and the Money for Life Blueprint. We will do if you're watching us, a free consultation, or on the first page, if you scroll to the middle, take our assessment, um, our financial freedom assessment, and kind of see where you are and see if it's a good time to talk if you're not ready to actually get on our calendar yet. So there's no right or wrong stage. It's only where you are and where you want to go. So one of the things we do with our financial GPS is we help find out where you are. What's the state of the union, if you will. And so what we call your present position. So your present position is the culmination of all the best ideas of your advisors. That's what your position A is. And is that going to get you where you want to go? That's what you got to find out with, or you want to keep laboring under incorrect knowledge. Okay, let's replace confusion with clarity. If you're new and you're watching this, let's book a conversation.